Within my process, I look at a lot of things. I'm very focused on market sentiment, and we use the daily sentiment index data, and then we plug it into charts, putting indices, stocks, bonds, currencies, commodities. We get it every day. So I'm looking at that data every day, and the equity bullish sentiment is back to extreme levels. So I look at market internals, and market internals right now are really funky. I'm using that technical term funky because we're seeing divergences that we've never seen. And I'm friends with all the, Jonathan Krinsky's and others that we all look at this stuff and we're like, what is happening? I mean, for example, the S&P is up 4.2% month to date, and you have 209 stocks up and 295 stocks down. And on the NASDAQ, you're up 8% month to date, and you have 51 up and 50 down. And that is sort of weird because you would normally see things higher. So this is probably what I'm looking at right now, my biggest focus. I also look at DeMark indicators, and it's very strange because we're starting to get exhaustion signals on the upside on the indices as well as in tech. Now, the other thing, and I'm kind of getting into my whole market setup here, with the internals, it's very strange to have the S&P up, let's say 8% above, or no, it's 9% above the 50-day moving average, and you have half of the components above the 50-day moving average. And on average, I'm nerding out here. On average, when you have that type of, you've never had it above 9% and then this low of, components there. But on average, you normally see above 80% above the 50-day when it's this far stretched above that. In the last 4 days, excluding today, we've seen more new lows in the S&P than 52-week lows versus 52-week highs in the S&P. Now that's bonkers crazy when you figure the S&P is hitting all-time highs. Even more bizarre is that the S&P year over year, which how they calculate 52-week highs, it's up 30% from that period last year. So when you're starting to see a lot of new lows, that is a concern. Yeah, we had 9% of the index yesterday hit new lows. That is just there's something wrong there, and it's very narrow. There's no sector making relative highs other than technology. So those are the things that I look at. I look for crowded situations, and I think technology is very crowded. I can go through some scenarios where you had Bitcoin very crowded on the upside. It was crypto week, and you had upside exhaustion signals, and that caught people and trapped people in crypto, and you haven't seen those highs in a while. I don't really care about crypto, but my targets was 66,000 on Bitcoin, which was achieved. So it's starting to tick higher again. We'll see where it goes. Silver got that way recently and then fell off. I think chip stocks are getting that way, and they're probably going to fall off and hit the market as well. So I really answered a lot there. Sometimes it's something that I can lose money on, but I think just staying focused with my process, with integrity, and never bending to the new thing or stuff that doesn't have any intrinsic value, that I really don't understand how to value. I guess crypto, I'm not a crypto person. I analyze the price action, but I'm just not one that's gonna, put laser eyes on and, talk it up. It's just not me. I like to, I come from a background of a hedge fund where we analyze things fundamentally and technically. So, really, stuff that is just technical, it's hard for me just to focus on that. Right now there's a real gambling mentality. So you have all the $2.3 trillion daily traded in zero dated expiration options. It's nuts. I mean, Warren Buffett said it's a gambling casino right now. That's concerning. Berkshire's sitting on $400 billion in cash, which is more than 24 other companies, um, other companies in the S&P. So they have a lot of cash. They're doing nothing. And I'm not really into getting rich fast. I mean, I'd like to, but it usually doesn't work. And I've had subscribers that have come into my work and they don't get rich fast and they move on to the next one. But those that stick with me understand the process and understand that we can grab bottoms pretty well at times. And that's what we try to look for. I'm short right now, uh, but I'll die on that hill.
Yeah.
Integrity, staying focused on a process. There's a lot of stuff that I constantly am reading, and looking for, what's happening in the world. And, um, a lot of times I'll try to unplug. And I think unplugging from the constant market noise is important. And I'm a real fan of people's creative process and their struggles, their triumphs, things like that. So I'm gonna this kind of I'm from LA originally, and I moved to Connecticut 24 years ago. And so I'm a Laker fan. I'm a much bigger Dodger fan, and I'm a fan also of this because my father passed away several years ago, was a sports broadcaster executive. And so we had tickets for all the Lakers, the Kings, the Raiders, the Dodgers, and,
Cool.
so I got to meet a lot of different sports people. And I just watched this week, a documentary on, Jerry West, who was the logo of the NBA.
Mm.
And the guy was a perfectionist. That was very well known, and he lost so much and repeated loss every single year against the Celtics in the 60s. And it just tormented him. And I was really intrigued seeing how he was tormented by loss and how to deal with loss. And he wasn't very good at it, at losing, but he had the fortitude to come back, and that was all he knew what to do. And I got a lot of inspiration from that. And it brought back a lot of memories of LA. And,
Yeah.
when Kobe died, I was, in tears, and everybody, was crying. But, so that is something that I think you can gain a lot of experience by watching, uh, examples of people that have gone through struggles, that are, talented, and come back and come out of slumps.
Hmm.
I think that was the take I had. I'd probably say I'd like to have someone do a deep dive on me,
Mm.
and someone that I respect, and that understands trading and could distill some of the positives, more of the positives, and help me with some of the negatives that I go through on a daily basis and monthly basis, by running a portfolio and trading. If I could sit down with, Stan Druckenmiller or Paul Jones and just say, what am I doing right? What am I doing wrong? How can I do more of the right? I know that Tudor tried to, do the Paul in a box fund, and that didn't work because it really took, just insight and change and thought, and they scrapped that quant idea, pretty quick. But that's probably what I would want to know, is just know more about myself and my strengths and weaknesses, and really just have someone like that would just say, why are you short this, you dummy? Um, I have a lot of humility when I trade, and I also can be stubborn, and I've been completely, everybody can hang up now, but I've been completely stubborn with some of these chip moves right now. Intel's my largest short. I'm just getting murdered on it. But when I look at the numbers, it's weird because we're in this world where, non-GAAP numbers are a blowout and everybody goes crazy. But if you look at the GAAP numbers, every metric was negative and they lost money. And that keeps me short. I don't see the company turning around very soon. I was a or not strategist, but a tech trader. I worked with a lot of great tech analysts over the years at my previous hedge fund. So I kind of understand how long it takes to develop technology and to turn around a company, especially one that in semiconductors, which is not necessarily, we're gonna build some new fabs and, launch them next week. It takes years and it takes development, it takes experience, and Intel's really run behind. But it's become a meme stock, and I really, if I wish I could dumb myself down and buy some of these things that others are buying, but it doesn't really fit into my process or strategy. Sometimes I'll buy some things that are a little sketchy, um, when, we get to, oversold markets. And when we get oversold, I want to buy top quality. I like seeing insider buying. I've been buying Nike. Everybody hates Nike. But Tim Cook was on the board. Elliott Hill is the CEO. They just bought, they've been buying millions of dollars worth of shares, and I think there's probably a turnaround ahead. So it's kind of a value. It's not really that cheap, but I could see Berkshire putting some money to work in a name like that. It's a great brand. Struggle, a lot of competition, but I think it can be overcome. That's kind of one that I, sort of looking at. I'll sit there with it. I'm not gonna, get killed. It was 160. It's 40 now. I'm buying it here. It's okay. So that's, yeah, long-winded response there.
No, that's great. Perfect.